Good morning, everyone, and welcome to the Quantum Leap Morning Leap. It is Tuesday, January the 26th. This is our pre-market trade plan setup. Each morning we come together, take a look at the market structurally, where we are in the macro to the micro, then drill down to our trade levels, our targets, and our hypothesis for the day. This is a subscription room. We do live trading during the course of the day. We do these live sessions each morning. If you're looking for a free trial, want to come in and test us out, just give me a contact on my contact information. I'll put it up in just 1 second. Please read through the disclaimer. Nobody here at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Here's my contact information. Just give me an email at quantumleapfutures@gmail.com. There's no website. This is not a commercial venture. Or give me a call on my cell, or send me a Skype contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And of course, if you like this video, there's tons more, probably over 300 days of these pre-market sessions. Just search YouTube at Quantum Leap Futures. And if you like what I do, follow me on Twitter at Crazy2. So taking a look at yesterday, we are looking for a rotational day yesterday. Our key trading line was at that 91. Basically, my trade plan yesterday was to get long above 91 and short below. I actually didn't have a bad day, but they certainly just, I was out of these trades far too quickly. I didn't hold the short, and then I missed this big short. I did get part of it once we got below the 78.75, but this was a pretty severe move down. And then we found balance, and the buyers came in right at our key line in the sand area at the 1870, and it's proven to be a significant level overnight. In fact, we just bounced off that level and rotated up some 9 points. We've got this big zipper area from basically 72 all the way up to 82. We're currently trading right in the middle of it. We're in around 77 right now, so it's going to be an interesting open this morning if we open up in this area. I was hoping we'd be above it or below it so we could trade it, but be careful in this area. It's going to be very whippy. Above the 82 area, look for them to continue up into the 88. But as long as we're below that 82 area, we could just chop in here, come down and test the low. There's some significant numbers below us. I'm going to bring Marvin on. He's going to talk about some of the levels that he's looking at as well. But before we do that, let me just go do my spiel. Let's start with the basics. Let's take a look at the news. There's not a lot of news today. We do have CB consumer confidence and Richmond manufacturing at 10 o'clock. Not really big news. We are going into the FOMC announcement tomorrow. Not expecting a lot of movement between then, so I think we're going to get an inside rotational day today. But that's about the only news that we have today. Looking at the macro to the micro, you can see, on the monthly, we've had this wonderful trend. I use a 9 EMA and a 20 SMA. We've broken down. We're currently below that. We actually went down and broke below the low of 2015. We actually came down and almost got the low of the August 2014, but we've bounced since, and we're currently below the 9 and the 20, so we are seeing some weakness. Going into the weekly, there is a potential inverted cup and handle setting up. The handle is not set up. I think it's 1949 is where we want to see the handle. come in, measure it from here. 1946 is the minimum we have to retrace, but that puts us up into the mid 1900s on the weekly. But we are seeing some we are seeing some weakness on the weekly, but we do have a technical gap, and that move into the technical gap close is going to bring us up into the 1948, 1949, where there's actually a naked cross up here, and that inverted cup and handle would be valid all the way back up into this naked cross. Going to the daily, again, you can see, let me just get rid of this. We've got a very strong trend going to the downside right now on the daily. We tried to get above the 9 EMA. We failed off of it yesterday, came down, and so far we're trading below. And we've got a fairly decent downward trend on the daily. On the 4-hour, there is a inverted cup and handle. The inverted cup and handle, let me just show it to you. We have completed the handle right now. It stays valid until we get above 85, but if we hold below 85 and break the low overnight of 51 and a quarter, the right rim, the measured move is actually down to 1834 and a quarter. Our daily ATR right now is running 44.21. So based off of the overnight high at 1879.75, our daily downside ATR target is, believe it or not, right down here at just above this at 1835.50. So this measured move should be significant if we break that 51. Of course, I'm going to be watching the 48.75 level, which is a key support level for us. Going down to the we've got consolidation going right now on the 4-hour. Going down to the 1-hour, you can see that we've popped up above the 9 and the 20, violated the downward trend, and we currently have a MA hug going on here at 1870. This is also a very significant level. This is where the buyers came in and where we just found some buyers from that move down off of the 79 level. So let's see if that holds. If that holds, 70 is going to be a key line for me trading today. Going down to the 30-minute, you can see that we've got an upward trend going on the 30-minute. We just created a technical gap, came down to that 70 level and bounced. There is a naked cross down here at 1864.50. So if we break that 70 level, this is going to be the primary target that I'm going to be looking at. 65 is actually what I'm really looking for. That's the 2-day microcomposite VPOC. I'll show it to you in just a minute. And then going down to the 15-minute, again, there's a naked cross down here at 1861 level, but we do have an upward trend. So we do have, on the smaller time frames, trends to the upside. On the 5-minute, we popped up, and now we've put in a lower high and coming down, testing the 9 EMA. There's a naked cross down here at 75. So keep an eye on that level to open, and that's going to be right in that zipper area. So but we are seeing a little bit of weakness coming in on the upward trend on the 5-minute. So taking a look at the structure. So basically what I've done is I've got 3 profiles. I've got the 2-day profile from the first 2 days where the microcomposite is at 72.75, key level from yesterday. The next 2 days they tried to hold value. That's that 65 I was talking about. They accepted value at that 65, and then they came up and they tried to hold value at the 1890, and then they couldn't hold it yesterday and they came back down. The 6-day sorry, the 6-day profile microcomposite is at that 70-50 level. So you can see, and when we take a look at the profile from yesterday, that's where the buyers came in, is at that 70, and they held that 70 level and then bounced from there. Didn't really get a big bounce off of it until last night, but then we did break it and go down almost all the way down here to the key support area at 48.75, put a low in overnight at 51.25, and then bounced from there. Currently, they came back and tested the 70 level after hitting the 79 and bounced again. So this is going to be critical for us to hold. If we don't hold, look for them to move down into first target, which is 67.25, but I'd be really looking for them to come down into the 65 and most likely down to take out the gap fill at 61. And if they don't hold the 61, look for them to move down, and I'd be targeting 56 and then that 51.25 overnight low and a test of the key support. Anything below here, then I'm looking for the bigger move down into that 34, 35 level based on the inverted cup and handle and the CHVN and our ATR target all down in this 35, 34 level. Above 70, look for them to grind their way back up through this zipper area, and the main target above is the 1886.75 and the 1890 area. 91, anything above that, I think we'll take a run into testing that 97 and 97.75 level. The 6-day microcomposite value area high is up here at 97, and then of course if we break out of there, I think we go up and test into the 1900s. So taking a look at the overnight, our overnight high is 79.75. Our overnight low is all the way down at 51.25. I don't think that our VPOC is going to shift. That is down at the VWAP at the 67.50, 67.25. There's an LVN here at 74 with the value area at 73.75. So this zipper area here I think is going to be very interesting trading. Very unauctioned. We moved through it really quick and left this whole area to be auctioned off. I think we're going to get stuck in this area for the morning trading, but I'm going to use the 73.75 as a trade area. Below that, I'll be targeting what will be a key level for me today, which is going to be this 1870. The close of yesterday was 69.75. So if we don't hold the settlement close at 69.75, then I'd be looking for a bigger move. I don't think the 68, it's a weak low here. So I'm really targeting that first target is going to be down here just in front of the overnight VPOC at 67.50. And then 65 and 64 area. Don't really need anything else. This is pretty toothy. I mean, very toothy profile overnight. Just expanding the composite. So below the 65, there's really not a lot below us. We've got the gap fill at 61. There's a little LVN here at 59.50. I'm going to use that as a trade level and take this off. And below that, if we get below that, I'll really be targeting this 56 area. And if we've left the overnight high alone, I will be looking for them to come down, take out the overnight low. Anything below 48, you've got your 41.35, and then of course that that is also a naked VPOC down there, and you've got the measured move on the inverted cup and handle at 34.50, but we'll be using the 35 and a quarter, 35.50. Overnight, the year low from last year is 31. Our weekly ATR target doesn't change. It's still down at 29. Our daily ATR target is down here as well. So I think it'll be a pretty good short below the 48.75 into these lower targets, with 41 being your first target below. And all the other levels remain the same below us. Above the 73.75, I expect to move up through, take out the overnight high, and test this this LVN up here at the 81.50. Our floor pivot is 77.50, right in the middle of this mess. Our change percentage of range price target is 81 and a quarter. And then just above that, you've got the value area low and the midpoint from yesterday. So I'm going to use in between those two, and if we reject that, I'll be looking to get short below 80, 81, and then above 82, looking to get long into that move into this upper distribution from yesterday, and a move up to that 86.75 will be the first target. Actually, yeah, 86.75. I'll front run the VPOC with the VPOC at 88. And then up here, we're likely inside of value. If we get into this upper distribution, they'll probably get continuation to test the other side of that distribution zone and the value area high all the way up at 95. And that's right near our daily ATR target as well. So we'll put that right there. And then just above that, range high 80 and 95.75, we get that naked VPOC and the naked close at 98.75. And then of course we've got the 1900. And I'd be targeting the 02 and a quarter range high, and the 0550, and then you've got the 0975, and then the big target above is going to be up there again at the 1914, 1915 area. I don't think we're going to get there today, but you never know. But I am looking for an inside day rotational, unless we break below the 1870, get below the 1870, then I think we get continuation and a move down into the 50 area, take out that overnight low. So that's what I'm looking at. Just taking a quick look at the calendar, you can see that we moved down to that 70 area. A nice move up, 9-point rotation up, and so far they're accepting value in around that 78 area. Upper Keltner is up here at 79.75. The center line is going to take us down to that trade level at 74, 73, 75 area, and below that, a move down to test the lower Keltner is going to take us down into the 68 area, and a test of that range low from the prior day, and likely come down and take out these lower targets. So that's what I'm looking at. Gold has found some mojo. I didn't trade gold last night. I wish I would have. I missed the move. You can see that we tried to break out. They went all the way up to the high at the 18 level, and we've come back so far. But the key line now is going to be this 11.1160, and if we could hold that, I would be looking for them to come back up into the 14 area, but more likely coming up into the 18 area. Below the 11 area, look for them to move down into the 06, 05 level, test the CHVN and the value area high that we just broke out of. And if we get back inside of value, a move down to the 1102 and a test of the 1100. Get below 1100, I think you got a nice move down into this 94, 95 level. So let's look at what I'm looking at. So I'm going to go ahead and let Marvin just let me know what charts you want up, Marvin, and I'll pull them up so they can see. You'll have to tell me which one's on the list of the charts that you posted.
Which ones? That's funny. Actually, what all those charts are the charts that we shared during the discussion of the move off of the 51 area where we put in that low. And the market developed in a pretty predictable fashion. How you trade it is always difficult because as the market is developing and you're seeing things, you're kind of in the moment, and then you kind of get lost in that, in that range because, we went from settlement at 55s last Wednesday. What was settlement yesterday, Doug?
1869.75.
Yeah. So we went down from 55s down to 51s, and then once we got back above the 55s, it was like off to the races. And it's not so easy to see. You can see it as you look outward in time because the 51 area, 50 area, 48 area, that whole area was interesting to Doug and I. Once we got down there, then it was like, and you got to understand, Doug fell asleep, and his trade was 20 points against him or something. I mean, how would you like to wake up? Talk about a rude awakening. You wake up and you're tired, and you look at your dome and you say, oh my gosh, I fell asleep and this trade went all this way against me. So your psychology changes. All of a sudden you're sitting there scrambling and you're saying, how do I make this ground up? And he had a hedge on one different instrument. What other instrument were you trading, Doug?
Russell.
And so he was working, both sides of the trade in a different instrument because of the fix that he got himself into by falling asleep. Don't fall asleep when you're trading. I've left orders on my dome. Part of it, I think, was I went to cancel orders, and my mouse wasn't working. I went and got a new mouse, but I only spent $5 on it at Big Lots. And so it was kind of whatever. And I've been on the wrong side of those trades. I've gotten into trades or shut down my computer, rebooted, and all of a sudden I was in a trade that I didn't know I was in. So a mouse for a few bucks would have been a good investment, I guess. And as the market developed last night off of those 51 areas where the low was, Doug says, why do you keep saying 51? Well, the most obvious reason is that's where the market bottomed. And so Taylor trading technique is the low is the low until it's violated. And Doug gave you levels below the 51s, and he had those areas very clearly marked this morning. And what I appreciate about trading with Doug is that when we're both trading together and we're sharing information back and forth, we'll see different things that we can't focus on all at the same time. And it's pretty cool stuff, really. I mean, I thoroughly enjoyed it. And we were talking nonstop for 3 hours. And what we're viewing is coming from different platforms. So I shared some of mine with Doug last night. It had to do with my 4-tick reversal chart on my footprint and where I have VWAPs and how I have balance points for each cluster of volume. And it seemed to make sense because the market was having some volatility, and I don't know, overnight, that's pretty good range, I think, from 51 up to 80. And then above us, as you look today and you look above us, there's a couple of obvious points that we could gravitate up to real easily, which would be like the 85, 87 area.
By the way, we just put in new overnight high.
And with that new overnight high, we could open up and drive a little bit, try and get up towards that that area, because there's a lot of volume there. There was liquidity. There's work to be done above 85 and 87, all the way up to 1900 plus or minus a little bit. And so there's also, if you look at it, there's a ton of stuff below us still. And Doug had, I think 86, Doug, was your measure for that inverted cup and handle or whatever. And we could see a real hard drive down off of that level too. I'm not trying to scare you into taking a trade long, but in looking at how the structure has developed, for 2 weeks we tried to create a value area and it was undetermined fair value. And we went all the way through that area from the 04 and a quarters all the way down 53 points. So they're working that part of the profile at the moment. And as they work that part of the profile, there's market structure in between, and then there are balances and imbalances of price. So last night, Doug and I discussed, well, what are some of the balances and imbalances? Well, currently at 83 and a quarter, we're out of balance to the upside. Doesn't mean we can't go higher, and we have those 85, 87 area where that area could get a little difficult. What's there? There's a monthly mode. There's also a monthly VPOC. And so if we get above that area, then maybe if a lot of volume comes in and we hold value and so forth, you see that when you look at developing value. It's busy. It's not easy to read and to follow that development. And as you see where overnight, where value was coming up underneath us all the way up here to the 80s. And it was following us up, and every time it retraced, it would retrace to 2 or 3 little markers that were down there. And what Doug and I discussed was, when we got down into the 50 range, the range of 50 to 60, I put a chart in the room, so there's a whole bunch of charts I put in the room, and I said it's time to start buying the developing value lows that are rotating upward underneath us. So every time you get a retracement, I put a bunch of arrows on the chart and illustrated where those areas were. I said those are the areas that I'm interested in trying to go with that shift. Well, that 50 area is pretty important, and below it, it's really thin. And we didn't spend very much time down there at all because it was only a few hours during one day, and then we reversed 92 points in a day. I mean, I think it was that much. In the next day or two, whatever, we reversed 92 points off that low at the 1804 and a quarters. And so we actually reversed 100 points by the time the move was complete. But radar, when I wrote up radar, I was looking at all these structure levels, and I go, well, the 80s are important, the 50s are important, and obviously the 1804 and a quarters are important, and then there's some structure that Doug highlighted below the 50s today that certainly could come into play. On the flip side of things, you look for the auction to tell you what you think, at these structure levels, what you think you're seeing. Can I read it? Can I get a proper read? If I take a short position up higher, you know, where am I in trouble if it goes, you know, against me? If I enter a short, say at 85 or 87, you know, where do I start to get into trouble? I have no idea what the market's going to do this morning. Tomorrow is Fed minutes, and we've got a ton of earnings coming out today. There was 134, 137 this week or something, 136 S&P companies. There's over 400 companies that are reporting this week on my calendar. And the earnings, by and large, have been so-so. They haven't been like they were each quarter of last year. They've been beating reduced expectations, and forward guidance has been mediocre. So I'm at this point, until I'm proven otherwise in my view, I still think that there's some downside based on that spike move down. We have to develop with time and price and volume clusters. We have to develop that value area. Troublesome part is it's starting to mature, so it's getting a little bit harder in some ways to see where we're starting at today, because we've already come up off of the 50 level, 51s, up to 81s. That's 30 points, and we could just as easily open up in RTH session here in another 10 minutes and drive hard to levels that are well below us. On the other side of things, if the market is enthusiastic for whatever reason that we may not be aware of, the auction will give you clues as to where you should be concerned. As an example, I took a trade with Doug where I put on some size, and the trade started going against me, and we had a nice discussion of, well, how do you work out of this one? And it was painful for me. I had enough size on that as it developed, it went up like 5 points, and then it retraced back a little bit, and I said, oh, I'm going to try and get out here, and it never quite let me get out. So I could have taken a 2-point loss, and it wouldn't have been bad, but I ended up taking a 5-point loss. It was bad. And so when we started breaking down off of the 79s, and we retraced back up to where the fall started, and I could see some indications that we're out of balance and maybe we'd come back to balance at the 70s. It was really 72s. I was thinking, well, I'll start shorting this on the way back down to the 72s. Doug says, oh, this 70 level sure looks kind of good. And so we're having this discussion as we're going along, and sure enough, we went back down, retraced to the 70 1/4, and now we rotated back up 10 points, 11 points, thereabouts, 10 and a half. So what was kind of exciting about it is that I have always followed Doug with huge admiration. The things that he does, the way he does them, are unique, and I hadn't seen them before, and I wanted to learn them. And after 3 years, it's finally starting to sink in better and better. In the meantime, I still wanted to see what I wanted to see, and from my perspective, my charts, my understanding of value, and Doug goes over all the value levels, all the VPOCs, VWAPs, high volume nodes, low volume nodes. He goes over all that stuff. Where was value accepted? Where was it rejected? I have a little different way of viewing the same thing. And the market in the first 3 weeks of this year, it's almost been an epiphany. It's everything came together in such a focus that the volatility and the focus brought it more meaning. It kind of solidified what I was seeing and observing and stuff. And I can adjust to slower markets, but to see the ranges and the reactions and the structure levels, how they developed, where the development started to break down, um, those things started to become almost overwhelming. I mean, it's just like, for 2 years now I've been writing the radar article, all those things that come up, and one of the things I posted way up in the room probably 8 or 10 hours ago was when we got to that 50 level, I had said earlier in radar, I said earnings are going to be out, it's going to be a whole lot of earnings. We've got a lot of work to be done. The bears will say, well, there's undetermined fair value on the downside. The bulls will say, yeah, but if we can get back up above here and earnings are actually better than expected, then we can go up to 1920, 1930, 1940, 1950. But I don't know what the earnings are going to be right now, right? So I know those levels exist up there, but I don't have an earnings catalyst just yet to say that we're going to hit them. But we could easily. So I said to myself, well, at 1850 last night in that area, I go, wow, this is a whole lot cheaper than when we were up there at the 1904 and a quarters. And it's only been 24 hours, and here we are down 50 points, and what would I expect to see once I got down there? So I looked at my value. I scrolled back on a couple of days to see where value was accepted and rejected, and volume and time, and I started just mulling through all those charts and stuff that are posted. And as that was occurring, that move from the 51 level up to the 81 level occurred last night when Doug and I mean, we started trading and he fell asleep. And then when he woke up and he found out, when he was in his position that he didn't even know he had, and then we reconnected at about, I don't know what time, it was dark 30 this morning sometime. Might have been last night, his time. And we just started, observing together. It was really fun for me. I hope Doug had a good time. It was nonstop banter for 3 hours. What I'm seeing right now is that based on the last, somebody there?
You're going to have to wrap up. We got 4 minutes to the open.
Okay, I'm done.
That was a quick wrap. Thanks for coming on, Marvin, and sharing your thoughts. Of course, we'll continue the conversation, but this is going to complete our pre-market trade plan setup. As always, trade well, trade safe, and we'll catch you on the flip side.